Hello and welcome to the weekly commodity market update. I'm Brownfield's Will Robinson, joined as always by the University of Missouri's Ben Brown. Good morning, Ben.
Morning, Will. How are you?
I'm doing well. I decided to rep the University of Missouri today, go back
Oh,
to my roots a little bit, maybe put a smile on your face at the same time.
yeah, I'm proud of you. Proud of you. Mizzou made.
Zoom made indeed.
Yeah.
So it's been an interesting last couple of weeks looking at the crop markets. First, little news, then an abundance of news, and it feels like the markets now are kind of softening, waiting for something new to trade on, something fresh. And this week, I think we're going to get quite a bit of a shakeup potentially. So Ben, before we really dive into things, can you give me an update on where we're sitting at as we enter this week?
Yeah, and I'll start by preferencing that it's been a up and down week, I guess is how I would change it or express it. We calculate these changes on Monday afternoons, and I'm gonna read them off here in just a second, and they're largely up. However, if we were to do this as of this morning, they would be all down week over week. So just that preference, I guess, to start, or that clarification to start. But July corn was up 12 cents to just under $6 on the week. New crop December corn up 4 cents to 5.29. July soybeans up 6 cents to 14.33. November up 3 cents to 12.72. Soybean oil was up almost 2 cents per pound. Soybean meal was down $6.70 per short ton. And then new crop July wheat up 36 cents on the week to 6.30 or 6.54. That West Texas Intermediate crude oil fell almost $3 per barrel on the week. Couple of things that really kind of drove that, or one big thing is we had that strike against the Kremlin, Russia's capital, last week that kind of really sparked markets to the positive for the U.S. producers, kind of under the assumption that tensions with Ukraine and Russia would amplify.
So Ben, looking throughout the rest of what was going on last week, are there any other highlights that were really pushing the grains and oil seeds?
Yeah, I'd say a couple of things. One, export sales continue to be bearish. China canceled 2020, excuse me. Yeah, China canceled 22 million bushels on the week. It was announced today that they canceled another 10 million bushels this morning, or 10.5 million bushels as of Tuesday morning. So those export sales continue to be pretty bearish. And then when we look at some of the other complexes, or some of the other components within the mixture, new crop planting continues to exceed planting pace. Outside of the upper plains, that region continues to be rather soft.
So Ben, we have quite a few things that we're going to touch on today, and really I want to start by talking about Russia, Ukraine, the gift that just keeps on giving when it comes to market news. But the Black Sea trade corridor, it's coming up for expiration near the end of next week. But really, over the next couple of days, Russia, Ukraine, and mediators are going to meet and discuss about extending that Black Sea trade corridor. Do you have any expectations on what these discussions are really going to cause within the markets over the next few days?
Yeah, I think we're going to continue to see headlines drive the picture here. Every time it looks bleak, we get a rally here in the US on prices. Every time it seems to, kind of tamper a little bit, then we see that fall in commodity prices. And that's kind of been what we've been experiencing the last 2 days. Russia has taken a pretty strong hold. That deal is set to expire, on the 18th next week. So that's not originally what Ukraine and Europe were saying. They were saying that they signed a 120-day agreement, which would take it well past May. However, Russia was adamant that they only signed a 60-day agreement. It seems like all the other parties are coming around to this notion that they have to do something by next week. My anticipation is that I do think it will get extended. Does Europe and Ukraine, do they make some concessions with Russia on fertilizer exports and stuff like that? Is yet to be seen, but I do think it'll be extended. So.
Well, what's interesting too is we've talked about this in the past under the assumption that the extension ran through July as we previously believed. So do you think that this kind of constitutes more I guess risk premiums being built into the market whenever it seems like these deals, as maybe the details of the deal seem to be a little bit whimsical at times. So do you think that adds support potentially into the market before anything gets done?
Sure. So I think we've built in a lot of that risk premium already. And so therefore it's there. And when things start to get resolved, that's when we see the downward pressure on prices. So I don't think it's a rallying cry to say that, hey, that's something that's going to push the markets higher, because I think it's already built in.
So Ben, looking elsewhere, looking here locally in the Midwest, we've had some great, I guess, planting out of the gate and into May. I know states like Iowa are well ahead of their 5-year trend averages, looking at how much crop they've already gotten into the ground. What do you think that this signals to the market early? Is it something that's going to, kind of level out the price support that we're seeing in other areas and maybe tamper it?
Well, yeah. So this last week, USDA reported that corn planting progress was 49%. That's up 23% from last week and above the 5-year average for this time of the year. As you mentioned, it's kind of a tale of different regions. Here in Missouri, at 92%, we're just about done with corn planting for the year. Not only that, we're substantially ahead of where we normally are on soybean planting. So we've had a very dry season. Several parts of Missouri got rain over the last 2 days, so that'll help on that crop if they didn't get hail. There were some places that got hail on standing soybeans, so that'll be an issue. But in general, there are states that are well ahead of planting place. North Dakota, for instance, at 1%. And I think, to answer your question, I do think that the expectation, now that we're kind of getting close to the middle of May, and I've told you all along, if we got to the middle of May and we were still having this discussion, that would lead to some concern. I do think that there's kind of some broad understanding that USDA is going to have to make some revisions on the planted acreage side, or at least, anticipation of what's actually being planted ahead of the June acreage report. I think most of that's going to come in the spring wheat complex. And so a loss of spring wheat in the upper plains, shifting maybe to soybeans in that region.
Well, and Ben, it's kind of funny, you talk about the timing of the crops going in. Things are can be, I guess, good or bad depending on how the following weeks go, right? So, Missouri, it's been fairly dry there, and you've seen a lot of that crop get in ahead of pace. But if that dryness continues, and you start to see maybe those yield expectations further out slipping downwards, so it's kind of one of those interesting things. It's like, yeah, this could be good for the market, it could be bad for the market, but we won't know until we see the weather reports out for the next month or so. You see what follows through. But does do you foresee a kind of a split that we've seen the last several years between the eastern and western corn belt on how planting's gone?
I would say more north and south, actually. Northern corn belt, or northern plains and southern corn belt, I guess, is maybe how I would chalk that up. Um, the weather forecast actually for the summer actually shows some favorable growing conditions for the southwestern part of the corn belt. So like Kansas, Missouri, Nebraska, those have been areas that have been very dry the last 2 years. So, the weather forecast this summer is still showing favorable growing conditions for some areas that have struggled the last couple of years.
Talking about some other general economic factors, last week the Fed adjusted interest rates again, raising them another 25 basis points. Do you expect I guess, continued movement from the Fed to cause any more ripples within the ag market?
Yeah, good question. So the Federal Reserve did increase another quarter point increase last week, or they approved a quarter point increase last week, bringing that short-term federal funds rate up to 5.25. That was largely expected, and I certainly thought we'd go ahead or they would go ahead and raise. The market felt like they would go ahead and raise. However, the bearish sentiment, I think, came in the post conference, which, again, the post conference under Jerome Powell has become very important, I guess is the right word, because the Federal Reserve has continued to do what they said they were going to do, and the market just hasn't believed them all year. For a year, plus. That's been the statement. And so the bearish sentiment for Wall Street came in that post comment or that post conference when Jerome Powell came out and said that, there was a chance that interest rates would pause. I mean, he didn't say it in this terms, but he basically indicated that there was a chance that interest rates could pause, but the likelihood of rate cuts this year was unlikely. And the market had been banking in at least 3, potentially 4 interest rate cuts by the end of the calendar year, bringing that interest rate back down. So the market is still, has probabilities of interest rate cuts towards the back end of the year. However, the Fed is saying that they see no signs that the economy is slowing. They're willing to watch and see what their interest rate hikes to date have done to slow down the rate of inflation. But certainly they don't see any indication yet that they need to cut rates. The reason I put all this out here is I do feel that in agriculture, those short-term rates certainly cause increases to operating lines. I think we're going to be facing those for a while, these elevated rates for a while. I don't think they're going to be cut, even though the market expects them to come down. I just don't think that we're going to see that outside of a major recession, which right now, the economy continues to add jobs. We continue to see strong unemployment numbers. In fact, this month, the unemployment rate fell again when everybody expected it to tick higher. It fell to, again, that historical low of 3.4. So again, I just don't see any signs that the Federal Reserve is going to cut those rates. So operating notes are going to stay high. Of course, that feeds into grain. When you store grain, that's an interest expense that's sitting there. So that's how it really impacts grain markets.
So Ben, a lot of good information there, and I want to round out this week's discussion talking about, some USDA reports coming out. We have the global supply and demand estimates coming out on Friday, and we're going to see, some maybe interesting numbers or I guess a fresh outlook as we're going to have the new crop balance sheet coming out within these reports, looking at expectations there. So Ben, do you have, I guess, early expectations this week of what we might see in that USDA report or those USDA reports?
Yeah, sure. So I'll start with the old crop side because May is the first month we get the new crop balance sheet. So the 2023 to 2024 balance sheets. I'll start on the old crop side. One, I think ending stocks U.S. ending stocks of corn, soybeans, and wheat all increase for that old crop. A couple of reasons. Demand has been really sluggish. I don't know if USDA makes the full revision that I think needs to be made on corn exports yet. They might slow walk that for a while. Again, we saw cancellations of Chinese corn again, or corn purchases again this morning. So, but increasing stocks, of course, that's going to spill over into new crop beginning stocks. The big thing I think on the new crop balance sheet is I do fully anticipate that USDA is going to print above a 2 billion bushel carryout for the 23-24 marketing year. And so that's quite a bit difference. That's almost 700 million bushels higher than where we're currently expected to be this year. So, that's something to watch out for. On the global side, maybe some smaller stocks across the board on smaller, back to the old crop. So globally in the old crop, so revisions downward, ending stocks again. I think, we continue to see some of those crops that were really hurt by weather this year continue to come down and not being compensated for by increases elsewhere. Brazil's crop production could continue to increase. Their domestic agency actually forecasted an increase in corn production. There was a slight reduction in planted area, but that was made up with a better yield. So therefore raising total corn production in the region. Just one other comment, I guess, on the U.S. wheat front. Again, growing stocks across the board for 2023 wheat production, not stocks, increasing production this year compared to last year across the board. Again, last year was just a rough year. That one area that continues to struggle is that hard red winter wheat that continues to be, hampered in the southern plains. But again, last year's crop was terrible as well. So a little bit better than last year, but not great.
So Ben, we're running out of time here, but a closing note, just talk to me about the importance that the May report holds for traders as you're watching where prices might go in the near term.
Yeah, so a couple of things. On the supply side for the May report, we largely know production, or at least what USDA is going to print for production, because we get the acreage number from the prospective planning or the planning intentions report, and then USDA releases that trend yield at their February outlook meeting. So that, combined with what we think for ending stocks from the current year, give us supply. The big thing that May provides us is the anticipation and the expectation of demand for the next year. And again, that's based on the supply, right? So some of these categories like feed use and corn is a function of available supply. So if that supply shrinks, feed use comes down. But again, it's really providing those demand signals for the new marketing year.
All right, Ben, looking outside of those, other than those reports coming out at the end of this week, what should farmers and ranchers really be paying attention to when it comes to market movers?
Yeah, so all the usual reports. Again, this coming Friday, May 12th, is the USDA supply and demand report, and then next Monday, the 15th, is the National Oilseed Processors Crush report. Where we get soybean crush that comes out at 11 Central Time.
All right, Ben, it's always a pleasure. Thank you for your knowledge this morning. Viewers, listeners, if you'd like to know more about what we do or our sister program, the weekly livestock market update, you can do so at brownfieldagnews.com. I'm Will Robinson on Brownfield.